Anyways, 200 daily moving averages are a very, very high time frame trend portrayal. So they're definitely very relevant. And so the fact that we're above them does set the stage for a much more favorable environment for Matic moving forward. So that means that we've now been able to compound the analysis. So maybe we go from like a range, right? However you want to draw it, doesn't really matter. The range high stays the same anyways. So we have 4-hour 200s maybe, right? Got to look for an efficient trend. But range breakout, high time frame trend shift, trend reclaim, whatever it may be, whether it's 4-hour, 3-hour, 2-hour, whatever it is, right? That body of a snowman gets compounded into basically a snowman now, right? It's essentially a snowman. This is where I always say when we refer back to something like confidence in trends. So you always hear me say something like, this is the trend, right? And we uptrend, we trend, and we trend, and we trend. And this is people's confidence usually. So as price continues higher, they get more confident. As price pulls back, they, mirror that pullback. They're like, oh, I'm actually less confident now. What changed? Price. This number, the y-axis itself. Did we lose a key level? No. Did we lose a key trend? No. Did we shift the structure bearishly? No. Did we do any of that? Did your system tell you that this is different as opposed to the last time, which was no different than the last time, which was no different than the time before that? Has that changed? No. But here's my confidence mirroring what price does. Eventually, what happens here is this trend breaks, right? And because you're so hell bent on your confidence shifting with it, you live what I call the life cycle of a turkey. So a turkey, this is the beginning stages of a turkey's life. And then, right, it has a nice little life. It kind of peaks at its life. And then what happens? That trend breaks 3 years later. Thanksgiving hits. It's now nice and plump and ready for the table. That turkey goes to zero. So we don't want to live the life cycle of a turkey, right? Because what happens when that trend eventually breaks? Your portfolio mirrors it. But because your confidence is all the way up here, as opposed to when the trend started up here, somehow, some way, miraculously, right? Like incredibly, this is a 300% uptrend. So by the time that this trend breaks, you're still up 250%. But this is your net worth. Because your confidence is all the way up here. The trend breaks once. It held the past 13 times. But because your confidence mirrors the trend, that's what follows. Life cycle of a turkey. So instead, what we want to do is we want to develop a thesis, right? We have our system. We know what determines high time frame context, high time frame shifts, bias. We understand something to that degree. And then we apply it. So here's us shifting into an hourly 200 MA reclaim. Here's us breaking out of the range. Here's us reclaiming 4-hour 200s. Here's us breaking out of a key level and reclaiming 200 dailies, and then we plateau. Now we hit a peak. There's really not too much more that you could do to get price more bullish than it is right here. Just because the y-axis, right? Just because price itself changes does not mean that your arguments have gotten greater. That means, right, if you are mirroring your confidence along with price action, that means that you're actually a pansy. And back here, when price was reclaiming 200 daily moving averages and shifting key trends bullishly and breaking weekly structure for the first time in 8 months after a negative 60% downtrend, you actually didn't have the confidence that it would continue. So you're shocked by the fact that it is actually continuing. So by the time that you get here, you actually did not see it coming. You weren't confident, right? As opposed to, here's an argument. That's a great argument on the highest time frame. We've now compounded onto all of the time frame arguments lower. Now we plateau. Either this trend continues or it breaks. And until it breaks, our confidence in that trend does not drop off. And in the meantime, when you break your hourly structure here, the only time where you can see a shift in your confidence. Wow, that's a relatively straight line. There's really not too many curves. That's pretty impressive. Usually it's like this, right? The only time that you can see a shift in your confidence is when you zoom in. That's the break in your hourly structure. How much did it shift your confidence? Slightly, right? Of course, it has to. You have to allow it to impact your degree of confidence somewhat. Because if you neglect this and you neglect the hourly structure, eventually that hourly structure is going to turn into a 4-hour structure break. Eventually it has to happen. All trends break. And then maybe that 4-hour structure breaks in or leads into a daily break in structure and a loss of 4-hour 200s and a loss of 200 dailies and a break in your weekly structure. And suddenly you're trading at new all-time lows. And what do you know? You tried your best to not move parallel to the trend, but you're living the life cycle of a turkey anyways. Because now you neglected all of the arguments in between here. And now you're only able to make the argument now that we're trading at a new all-time low, right? So we have to allow it to impact us to some degree, but only when we zoom into that low of a time frame can we see that adjustment that's necessary. So the whole point of me running through all of this is that Matic has now developed the snowman. How do you get more bullish from here? Is there really much that you can do to get more bullish? Because what's the daily level to level analysis? Level to level. Does our degree of confidence, does our perception of probabilities change, right? Other than maybe breaks in hourly 200s or loss of a 15-minute 200 MA local trend, or right, those insignificant things when we're talking about daily level, right? Does our perception of probabilities change at all? No, it's the same. It's the same snowman here that I would have told you since here. It's the same snowman. It's the same argument. It's the same system. It's the same philosophy. It's the same confidence. I would argue the only time where you start to get even more bullish is a breakout above here, in which case your argument that has already kind of hit a peak just kind of does that, right? Just barely. It's like, okay, I already knew that we were uptrending and bullish and had all this momentum and heading to the top right corner and threatened the breakout and whatever. But now we're actually like, there's only one resistance level left before this goes into a new all-time high. But from here to here, are we getting more bullish? Oh, price is up 30%. I'm now more bullish than what I was here, right? Which was more bullish than what I was here. No, it's the same trend. It's the same argument. Then we actually break new all-time highs. You can't get any more bullish than that. You cannot get any more bullish than that. So if you're increasing your confidence when we break into a new all-time high, you're increasing your confidence. So right here, you're the person who has caught whatever that number is, 144x or whatever, right? You caught that kind of a move, but then that one trend breakdown, you live in the life cycle of a turkey. This part, guys, this is the issue. Not maximizing on this. Not, oh my God, I need to be leveraged trading with 300% of my net worth, right? That's not what leverage is for. Leverage is the most amazing tool in existence as a crypto trader. It's not what it's for. It's to mitigate exchange risk. It's the thing that allows me to say, hey, go use Bybit, go use Femex. Because I know if either of those go kaput, well, you had leverage. You could have just deposited 1/10 of your account as opposed to all of it. And you could use 10x leverage and you could trade it that way, right? You can mitigate that inherent exchange risk. So the issue is never, oh, how do I make more? The issue is always, how do I keep it? So you want to keep it, you got to cure the cause, not treat the symptom. You have to be confident in your analysis from the get-go, from the very start. And then if we do something like this, You're not the person who was caught off guard and, "Oh, I actually didn't see it coming. I had no idea that this very well may happen," even though that's entirely the point as to why I'm here.